Good morning, Scott Redler, T3 Live. Welcome to today's morning call. It is Friday, the Friday before Santa Claus's trip this weekend. Well, I guess he came a little bit early to Wall Street. I think traders need to be somewhat thankful of the action that we saw this week. It was pretty much the first 4-day methodical move we've had in a while. We've had choppy moves. We've closed higher and gapped lower. We've closed on our lows and gapped up. This was like the first 4-day little time cycle that you could have stayed with the trade, that followed rules and strung some days together. If you take a quick look at the chart, I'll show you what I'm talking about. Here's the S&P. All right, this was the day the market woke up. That was Tuesday. Tuesday igniting bar. Okay, what did it do? It ignited a move through this descending little channel here. If you also take a step back and look, you will see you have your low from October, your low from November, and then you have the low of December. And this also was that, that Fibonacci number that came into place the same way of the Friday after Thanksgiving. And then what happened since then? Okay, that was a day to switch gears. If you were short, you had to get out of the way. If you weren't long, you had a little opportunity. Remember that 123.20 to get in? So this was your igniting bar. And then on Wednesday, you had Oracle, which shook things up, gave you a nice pullback to hold the top third here. So if you miss this, you're like, I want to buy a pullback, there's your pullback on Wednesday. Then yesterday, nice little small follow through to the upside. And now today, we're up a little bit approaching the 200-day. So at this particular point on low volume on the Friday before Christmas, do I think we're just going to bust through this downtrend? I'm not sure. But you know what? If you've been involved for the past week, you don't have to be sure. If you've been involved since Tuesday, and I've tried to hold more, multiple positions, and I actually was pretty directional. I didn't even have a hedge on, which was definitely could have hurt me a little bit. But you've had a nice move. You've had a nice move in some of the banks for an oversold bounce. You've had some move in some of the stronger tech stocks like an Apple and some others. And then some of the oil service stocks have moved up. The ags have moved up. So you could have picked a few different stocks that you like, and they all had a nice move. So if you want to be a little risk averse, you sell into this up open, you take your money, you just had a nice week, go celebrate with your family and your friends, and then revisit next week. Or, if you're in a tier 2, sell a tier into the up open and then figure it out and continue to day trade like we did yesterday, where you had a nice little cute short in IBM or some of the other things. So there's at least been a week of stuff to do. If you take a quick look at, let's say, Apple. Apple was something that, acted really well on that Tuesday, and rightly so. This was a nice wide range bar, right? Wide range bar, strong, right into resistance. Then on that Wednesday, we talked about if you missed it this day or you sold it on the close, let's see if we could buy it at the 50-day. And that was right around 392, and that's where it stopped. Then yesterday, not an exciting day, but if you bought the dip, you're up pretty well. And now the question is, can it push over 400 and trade into this area, before it hits some major resistance? So for any of you guys still in Apple, just know your time frame. I'm still in some. I'll see if it can push through 400. Maybe I'll add a little bit intraday if it has the right setup. But I'm going to be lighter in here versus this area of the move. As far as Google, still hasn't really stretched yet. Maybe today's the day for Google if it could finally get above like that 632 to 635 with some kind of power. If you look here on the daily, it's been quiet, but rightly so. The market I don't think is ready or doesn't have the confidence yet to let some stocks just break out. But overall, Google's above all these moving averages. If it could finally start getting above 632, or this is 636, on the weekly chart, it looks really good. Nice little bull flag right here after a big move. And then on the monthly, looks even better, where next year, barring any kind of systemic type of scenario, this thing should clear this area, and then you have 700 to 750. As far as some of the banks, switch gears a little bit. Let's talk about Goldman Sachs. Goldman Sachs was a bank that I chose to go with, but all of them had a nice move, and you could have positioned on that Tuesday. They tried to sell them down, they couldn't sell them down, so they had a nice bounce. Doesn't mean banks are going to be the sector to be in 2012. It doesn't mean the smoke is cleared. It means that if you're a trader and you traded with rules, you had nice trades here. So if you look at Goldman Sachs, you will see on the daily chart that this is the exact move that we wanted to trade for, and thank goodness it happened. Sometimes things work out. Here was the low. This was Tuesday. You could have bought a bit of a dip here or added above Tuesday's high. Had a nice move, and then yesterday it stretched. So I'm probably going to sell the rest of my Goldman. I'll get flat up 50 cents, and that's all I was looking for. And sometimes, when it's frustrating to be a trader, and sometimes, the probabilities play out and patterns play out. That's why I don't think everyone needs to just change their rules, because at certain times during the year, the market changes a little bit. The rules are there for a reason. Most of it's because of discipline. Most of it uses chart patterns, and you can't help it. The volume's light, and you have these headlines, and things are whippy. But when things are somewhat normal, these are the rules that are going to make you money and keep you safe. So look at the other banks also. Fourth day in a row, wouldn't be buying the banks. They're more of a sell. As far as just say, take a look at the OAHs. Nice little move also. Still nice reverse head and shoulders pattern. Or inverted, I'm sorry, left shoulder, head, right shoulder. A little bit of a move up, 4 days in a row, coming into some resistance. Not really mega resistance, because that comes around here. So, there's definitely still some room here. I wouldn't sink your teeth in if you're in a tier 1 and you didn't get stopped out like I did here. Just stay with it. If you have a thesis for 2012 that refiners are going to be the place to be, you do have another little pattern here. You have this like descending channel here. So this would be an area that I probably get in it. This would be if you're in tier 1 and you want to get to tier 2. This is your tier 2 buy for then a move to what could be the neckline of this, but I think that's going to take some time. As far as some other things to look at today, gold has been weaker. I'm probably not going to trade it myself, but if you look at the pattern here from this wedge to that wedge all the way down to this longer term support, not much of a bounce off this. Really not. Came into the 200 day, tried to get above it, couldn't really. So I think guys made a little bit of money short yesterday. So if you want to kind of just outline where it could be in the support. So you had this move off the lows. It's trying to go sideways. Here's your mini little range. If it starts breaking through yesterday's low, it could continue down. If it trades up here, there will be a bit of a short squeeze through. Because again, this still does have room to retest this 164, 165. Before heading lower. So just don't get too big too fast, in this trade thinking that all of a sudden, we're going to be at 1400 before you close your eyes, because that's not the case. You could easily retest this broken trend line, doesn't get above it, then you could see different type of action. So just keep taking the trades there. As far as, Yahoo guys are trying to play for a takeover, I don't think it's going to be one big swoosh takeover. So, just trade it back and forth. It's going to probably be that they sell a few divisions and this and that. And if you look here, they did try and sell it a little bit yesterday. Some guys did short it like right into this range. It's at this high end. So it's going to need to be taken over, which we all know that those are hard to find for it to really go. If it just sells a division, I don't think it's going to create that much excitement. And really, there's not much for me to talk about. We just had a 4-day move. Do we close on our dead highs today, or do they sell them, take us negative, take us down a little bit? Whatever it's going to be on pretty light volume. There's no reason for you to get too enamored with the trade today. I think most people had a good week, at least 3 positive days in a row. And if you're still long, that things are up, you could sell some. Maybe we get some setups today. Like Amazon and Baidu, they're kind of tough to handle right here. Baidu went from looking like death to rallying yesterday. And, if you look at this little mini range here, it's sort of still intact. So perhaps for their day trade, if it gets above this 118, 119, it could go. It might need some kind of news for that. Sina also. It's hanging in there. It's something that if we see some volume, maybe this could be a cash flow trade. I'm not in there now above like 55, and this is 56, 70. So it's going to need some heavy volume there for that to happen. Some of the retails have actually been acting really well. Someone asked me to put up Walmart. Walmart, great stock to own for the year. This was something that we had earlier. When it broke, this is with Alex, we talked about it, broke above this downtrend. And now look at this nice move in Walmart, showing you that people want some big names, some big liquidity. And I guess Walmart is a great place to shop, and there's a nice value there, so it makes sense in a slow economy. What is Home Depot doing? Home Depot, you know what? Remember, I was on, this was actually my stock of the year on the call. Because they said I needed to come up with one thing, and this was, let's see, where was this? Who knows where it was? All I know is it's back near the highs, so that's if you stuck with it, it's above the moving averages. This actually looks pretty good. I guess if the housing market gets a little bit better, people are going to need to go to Home Depot, and if you can't sell your house, they want to fix it up a bit, you got to go to Home Depot. So there you go. Either way, it was a good trade for the year, showing you that if you stood with the trade as an investor, as a macro investor, you could have got paid also besides just trading. So the real moral of the story is you got to pick and choose how you're going to approach the market. Are you going to be an active professional trader, not really carrying positions, just making cash flow? Are you going to be a macro investor and tries to stay with stocks, 6, 7 of them over the course of a year or 2 years, trading a tier system so you could hold some and then add some at the right price, probably when traders are trading it for cash flow? Or are you an index player and you have a 20-year time horizon? There's so many different ways to approach the market. You just have to figure out which one is for you, what your suitability is, what your risk tolerance is, and not kid yourself. But if you're watching this, I think you're taking a step in the right direction. So to everyone in the community, from me and Red Dog here, hey buddy, it's been a challenging year. But it's been also a profitable year. There's been 2 or 3 major inflection points that were tradable, and either you performed with it or you didn't. And I'll do a video on that next week. This is something I did in a seminar. I thought it was pretty good, like the 3 different complexion changes of the market. When we had that head and shoulders top that you could have sold, that we tried to see early when we broke 1250 for that short move, or the measured move down to 1140, went to 1100. Then that outside day, when we said that boom, day to take notice, 75% chance the low is in. We went from 1160 to 1292. I know it was fast, I know it was furious, but you could have caught that. There was definitely, a lot of action there. And then lately, it's just been a grind back and forth as the market's been trying to figure out, can it continue into the new year or will it continue down? And when you get into a time period like that, it's not as consistent, it's a little choppier, and you get those, the days that you don't expect. But, leaving off where we have been this week, at least we had a nice methodical week going into Christmas. Gap up Tuesday, buyable Wednesday, little follow through Thursday, Friday, take your trade, go spend time with the family and figure out what you did well and what you need to work on. I'm not sure if there'll be a recap today. I have to see how the day goes. If there is, it'll probably be around 11:30 because I have to be out of here at 12 because Chase has a recital and I need to attend it. So all that said, happy holidays, everyone. Scott Redler, T3 Live, the morning call. I might see you at the recap. If not, I'll see you Tuesday. Enjoy the long holiday weekend.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.